Last week, my model predicted 47.5 for Celsius would be the only strike price to be in the money. This did not come true. In fact, Celsius dropped 1.3% last week and closed at 46.55. However, for a covered call AI model, this is a pretty good prediction with 47.5 as the only in the money predicted strike, 50 and above considered out of the money. I successfully traded the $49 strike short call for Celsius and pocketed about $20 in premium. This AI model uses historic weekly price action data and then trains and tests the model and predicts on the new week. We cover some indexes like the S&P SPY, along with individual popular stocks like Apple and Celsius. The potential benefits of this model primarily is to sell covered calls, where the model attempts to predict which strike prices will be in the money. You could also buy calls based on the predictions. However, that's much more risky. The way to read these predictions, the AI model has strike prices above the current stock price at the beginning of the week, and the model tries to predict whether or not the strike price will be in the money or out of the money. For example, for this week, SPY will be between 625 to 629.99 based on this AI model by end of week, where predicted equals 1 means the AI predicts the strike price will be in the money. When the predicted equals 0, then the AI predicts strike price will be out of the money. On July 7th, the major U.S. indices fell around 0.8, 0.9% after President Trump announced new 25% tariffs on imports from Japan, South Korea, along with potential rises. This announcement rattled some global trade sentiment. However, we've seen this before. Trump threatens with tariffs as a negotiation tool, start high and end low. Since investors have already gone through April and understand how the president acts around tariffs, I believe the drawdown will not be as significant compared to April on this news. Tesla shares dropped around 6 to 7% following CEO Elon Musk announcing a new American party. Investors are uneased since it seems like Elon is putting a lot of time and attention to politics instead of running Tesla. And I would think the Tesla investors would be much more happier if he spent more time running the company. There's also some uncertainty in the market when it comes to the trade deadline around July 9th and 10th for the reciprocal tariff deadline. And then finally, Datadog was added to the S&P 500, increasing the Datadog stock price in the meantime.